You're watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome back, everybody. We'll be talking today about bottoming patterns, one of Dan's favorite because he just loves large bottoms, rounding ones that show accumulation and the ability to get bigger. So let's continue, Dan, before I get too out of line with our overview. There's Dan. Right.
Greg is saying Zoom is unable to detect a camera.
That's your computer. I see your slides.
Oh.
Unplug it and plug it back in. Check your video setting on Zoom, what it's connected to.
Yeah, I haven't touched those things. Select a camera, pro stream. It shows the camera working because I see myself in it. It's just not there.
I see you now.
I don't know what happened. All right, let's go. Sorry for the delay. Welcome, everybody. So yeah, stocks trade uptrends, downtrends, sideways trends. And we talk a lot about it. We will as we go throughout the program. So we're not going to be talking about just a bounce and a downtrend. We're going to be focusing on longer term downtrends that are now forming these big bottoms. And are they ready to resume a new uptrend? And we'll spend 45 minutes, look at other charts, but I think we have a lot of amazing information to share with you to give you the tells, as we say, to say, yeah, I think this is bottoming. It's worth going in. And we were talking in the green room about sometimes we don't know. And we'll show you examples of that also. All right, so this is our slide we show all the time because it's our technical approach to trading anything that moves. We're candlestick technicians. So we start with a compelling pattern in whatever trend it's in, uptrend, downtrend, sideways trend. But our bullish setups in an uptrend on support, multiple time frame analysis, showing relative strength, moving volume and moving averages are what we call secondary. Are we timing those with the broader markets and market internals? And these are the concepts that Greg teaches in his swing trading course, and then you put them together, and that's our technical approach of trading high probability setups. And then, of course, position, and once you're ready to hit the button, you calculate position size, you have money management for your trading plan, and you gotta have the discipline and patience to follow your plan. There you have it. This is a one-page summary of our technical approach.
Anybody having problems following the discipline of your plan? Does anybody not have a plan? Anybody been working on a plan for the last 25 years? Yes, to which one, Frenchie? Hey, Pam. So it's kind of a trick question in a way. So plans can change based on market environments. Do you have a plan for changing market environments? So today's subject is about, one thing, bottoming patterns. And Dan said it's going to be things that have gone down for a while and bottoming. But you can apply those kind of patterns we'll talk about to things that are in uptrends, because bottoming is bottoming. But when we primarily talk about bottoming, okay, something's been going down for a while and it's forming a low point and it's ready to go up. But changing plans is a natural part of changing market environments. However, your foundational stuff, which is what we primarily cover here in MT Live, is the foundational stuff. It never changes. It's just how you apply that to the current market. It's like, things primarily bullish? Are they bearish? Are they just going nowhere? So let's get into it.
So these are just 9 beautiful bullish setups. It's a starting point on whatever time frame that you're trading, and then we overlays these same concepts to whatever time frame you're trading. And I typed up here, well, where's your bottoming pattern? I don't see that on here. Well, this doesn't include all of them, for one thing. But, and as we said, consolidations can happen. And I think, what was that, last week's MT Live, we talked about trading breakouts. So breakouts could happen in uptrends, sideways trends, or kind of a breakout in a downtrend is kind of what we're talking about today, because it's down, it's sideways, and instead of it making a lower low, then it's a breakout to a new uptrend. We talked about a couple of these W bottoms in the green room, saying, look, this is a beautiful short-term tradable bottom, but it's a bounce in a downtrend, and it's not a bottoming pattern like we're going to be talking about today. So let's just jump into it, a couple words here, and then, the examples will start getting your blood flowing. So Greg, I added your quote up here. What does that mean?
You should have capitalized treacherous. But yeah, I mean, they're treacherous because you got to, everything we talk about with patterns is what's the psychology behind the pattern. Now, if XYZ went from, say, 100 to down to $20, and it's been basing, let's say, for the last 3 or 4 months, and you start looking at different candlestick patterns, bar by bar, top bottoming tails and stuff. Think about the thoughts that creates, because that's what patterns are. They create thoughts and they create beliefs. So one of the thoughts that I think most people have, because we're all the same in many ways, when I started out was, hey, I'm buying something that was at 100 and now it's at 20, which means it's cheap and it's going to go up a lot. Is it going to go to 100? Well, maybe not right away, but could it go to 40? Yeah. So you have these beliefs about, hey, it's cheap, it's down a lot, it's bottoming and so on. And many times it makes a substantial move from that. And so now that creates stronger beliefs that it can go even higher. Well, many times with bottoming patterns, those really strong moves, all of a sudden they evaporate, and very often it collapses right back down to where it came from, and that is treacherous. So you have to know. It's like the analogy of, hey, if you can go pick up the $100 bill in the lion's cage before he snaps your head off, and it's kind of like what you're dealing with bottoming patterns. You can't get so enamored with the $100 bill to not recognize the nature of the beast. And bottoming patterns are of that nature, where they'll take back all of your gain and they could turn it into a loser if you don't realize what you're dealing with. And so that's what that means, is to understand the nature of that particular trading pattern.
So since we're talking about bottoming patterns after downtrends, a downtrend is 2 or more lower pivot highs and lower pivot lows. So the first common sense thing that we're looking for is, if it's a potential bottoming pattern, is, okay, hey, it did not make a lower low, lower high anymore. shows signs of bottoming through consolidation with the 20 and 50 flattening out. We use the 20, 50, and 200 on our daily charts, and it's just a visual, the angle of them of what the short intermediate term trend are. So if those have flattened out, I can take off the candlesticks. If I see these moving averages coming down and flattening out and the 20 starting to rise, then I know I have potential bottoming pattern on my hands.
Just
And
for
then
the simplicity, Dan, so of people that, we always have new people that are, joining MT Live. So think about, we use simple moving averages, which means they're not exponential, they're not weighted where, the current data would influence the moving average to move in a different way. So every data point is the same that's being averaged. And so by using these two moving averages, relatively short one and intermediate term one, and remember, we're talking about something that was moving down, for the 20 to flatten out wouldn't take too much time. But for the 50 to also flatten out with the 20 is going to require a longer period of consolidation. So moving averages that we refer to as visual aids, just, hey, that picture means this, thing is to understand over a longer period of time, things have gone sideways long enough to create a consolidation that is, well, if both of them were railroad tracks down and they flattened out, figure it's got to take at least a month and a half to 2 months for both of those things to flatten out. And especially if the 20 was starting to flip up.
Right. We'll show you how to use multiple time frames. We can look for turns on a smaller time frame. And then, I have Inspector Clouseau here. We're always talking about, tells, using the poker analogy or an event. We use this term of something's jumping out at us. Could be a gap reversal, wide range bar, range expansion. I'm going to show you Intel later on here. And it's in a flat consolidation with a flat 20. But there's no event. It's just going sideways in a downtrend, but we'll talk more when we get there. And then our entry, of course, is I have a setup, I have a void, I have a logical stop loss, and then we manage in between. All right, the rest we're going to look at beautiful examples. So on a lot of these examples, try to picture looking at the moving averages without the candlesticks. So I have a longer term uptrend. The red is the 200. You can tell here I'm starting to sell off the 50. So I'm in a short and intermediate term downtrend. Okay, but now let's look at candlestick action. Lower pivot highs, lower pivot lows. Deep retracements that took out a prior pivot high. So by definition, we have broken the back of the downtrend. Do I do anything with that fact? No, I broke the downtrend. We trade patterns. Well, now look at my flat 20 MA. You can count the bars, but that's 2.5 weeks of bullish price action. Red bars ignored, multiple bottoming tails, range expansion, closing breakouts. So you could have bought over the high of that. Now I have 2 inside bars, which we call a master trader 1, 2, 3, 4. This is what we call the price void. Look to the left. Because of the size of this multi-week base, it can move up here, and you'll have different target levels, but it has a big price void because of this momentum move down.
So I'm just drawing in there, but the X's are the pivots, the highs and lows, which are defined. Highs are 3 lower highs to the left and right, and lows are defined as 3 higher lows to the left and right. And then we see that forms a trend. So the bottoming, we just said we want to see the 20 and the 50 flattening out. The 50 isn't flat here.
Right.
So we're not always going to find perfect scenarios, but one of the things someone mentioned about scans, and so we use a lot of scans, and so you can say, I want, a moving average to be flat over a certain period of time, and depending on how much you tweak that criteria, it can remove certain things, and to a certain extent, you want that. And other times, you got to kind of balance it out. So, this is a situation where, the moving averages could get in your way. And you say, well, what does that mean, Greg? Get in my way? Well, everything you put on the chart creates a belief. And so if you have a strong belief that a moving average is support or resistance, that's going to make you think and act in certain ways. But remember the beginning slide, it said price is king. Right? We don't trade moving averages or visual aids. Price is king. So this was in a downtrend. This retracement on a closing basis took out this. So the downtrend's broken. And then if you apply the bars, bottoming tail bar, another bottoming tail bar, a big wide bar that takes it out. And then you get this, 1, 2, 3, 4. You actually got 2 of them, right? You got one here. So that's your 1 bar. That's your number 2 bar, the inside bar. Your number 3 bar, it requires it to take out the low of the inside bar and then regain, come back up again. That tells you that there are buyers lurking below, right? Institutional big money lurking below to pick up the shares. So at that point, you have to say, you know what? Prices say it's going to go up, right? The moving averages are there, but as I explained, the prices say it's going to go up. Wide range bar. Now you say, well, that's not an inside bar, Greg. It took out the high. Big deal. Right? Come on. Let's bring a little common sense into this and not be so anal and looking for that holy grail perfection, right? The body is in the top part there, and then this bar takes out the inside bars low. There's still buyers lurking below there and right back up again. So that's an add. If you didn't get in here, there's your secondary add, right? And that's part of the money management. Add.
This is a closed trade that we maintain in members area, open and closed in a spreadsheet. And to the left, it shows the date, the symbol, the stock or option trade, the stop loss, entry price, et cetera. But we keep the history because all of our trades, we explain what we're doing. So we bought the stock, 1, 2, 3 breakout of a bottoming pattern at the 50, 200, right there, 50, 200. We had an initial stop. We sell a little into strength. We had an 8-day swing trade. That's what our swing trading is. 2 to 10-day gains, get high probability setup, manage in between, trail stop out, and go on to the next trade. And so, we could spend hours. We have every one of these MT lives. We have hundreds and hundreds of examples. So, we'll just go through as many as we can here before we switch over to real charts. But yeah, take it away, Greg. Saying
drawing another shakeout type of a pattern. You can call it a head and shoulders bottom. Yeah. It went down and it came back up again, and in a pretty violent way, and it corrected. So here was your event or clue. Another one. First of all, there was the deep retracement, but it gapped up and there are sellers there, right? But this one here, where it dips down and comes right back up again, and then this little sideways corrective price action right there, you put it all together. And so here, the 50s flattened out, the 20s flattened out. So you've got this longer consolidation. But look at the price action. Down, sideways. Oh, that's bottoming. Oh, you guys like this? Maybe you and Dan don't want to talk about this bottoming action that didn't work out? Bottoming action is treacherous, and this wasn't even any kind of big moves. I don't know if you got any in here, Dan, but some of these that come off of bottoms look like they're going to the moon and come all the way back down again.
Well, and also, Greg, this bottoming action to the left, in our slide of we're looking for tells and event bars. Yes, it's going sideways, but the
Right.
20, it's still below the declining 20, declining 50, and there's no event bar that jumps out at me here is the problem. But here there is, as you covered already, so I won't duplicate it. And here's our big price void
Let me
because of
just
this.
add a little something here, because I mean, again, people that are new, what the hell is an event bar? You guys are using words and I don't see any pictures, right? So what would an event bar be? It jumps out at you. It's like, you can't miss it. It's in your face. It gapped down and it rallied all the way back. It's a big bar. So this, right? If we were to condense it, you'd see a big bar because it went down and it came back up again. And then it consolidated. So events can be big bottoming tail bars. They could be gap reversals. They could be something like this, which, it broke down and it came back up again. So we're looking for clues that institutions are lurking below. They believe something is cheap.
Yeah, and I would say, the event in this particular example is these two bars combined, because that alone doesn't tell me anything. This is irrelevant until this bar closes back at the high.
Sure.
Now, so that's my event. I'm at the neckline. I got my price void. What do I got here? Declining 2050. It's messier, right? So we're waiting for our, use the baseball analogy. My pitch, once I recognize, I don't recognize anything here, anything here, anything here. I don't recognize anything. Now you got my attention. Wide range bar, inside bar, that's my 1, 2, 3 continuation. I got a price void, and that's where I enter on the 1, 2, 3. 4-day swing trade. So on this one, we used call options. We bought them. We love buying options when they're liquid, because we get for directional trades as the benefit of leverage and limited risk. And so we made 86% in 4 days buying call option for $1.45. Big old bottom. Where's my event? Where's my event? Well, now I'm consolidating above the 20. I have a closing breakout. I'm not marrying this thing. It's not a core long or anything. I'm a swing trader and just trading a bounce. So over the bar's high, stop under the low. Look at this. We held this thing 13 days. It was easy management. About to stop. All right. So again, keep in mind these moving averages, because see this one declining 50, declining 200, but I have a big void and I have a big bottoming pattern, and we're swing traders. But notice how this one, where it is relative to these moving averages more. Yes, the 200 is declining. I get it. Because it's also a slower moving one. It's taking 200 days of data, and every day it's dropping off the last one and adding a new one and dividing by 200. So they're slower moving. But this blast off.
That's what I'm talking about.
Dragged it. It had to drag this 20 up. Well, and notice here well, actually, I could have pointed to this one as a consolidation breakout. I should have, in retrospect.
So it's hard to see a jump out until your eye is trained, but that's the event bar.
Exactly right.
It took out the prior bar's low and came right back up again.
Yep. Yeah, I should have pointed to that. So now, got climactic, slam down. I still don't recognize anything. Okay, it's stabilizing at the rising 50. Now I have closing breakout. Here's my beautiful 1, 2, 3 again. I'm not marrying this thing. My target would just be over here somewhere. We're swing traders. 7-day swing trade, 13%. Just buying the stock for a little bounce. But this is my bottoming action at the 50. Whereas this one is the true, bottoming pattern from following a long downtrend. Look at all the MAs. I have a rising 200, 20 and 50 coming in. So it's a short to intermediate term bottom within the context of a longer term. So, okay, guys, I'm following along, and just to keep reinforcing, we're waiting for our pitch of a pattern that we recognize. So where is that in this case? Well, there's nothing here. It's still the downtrend, lower pivot highs, lower pivot lows. This is a bear 1, 2, 3 that I would have shorted. Okay. Still nothing to do, nothing to do. But it's all the way back up to this resistance. So it broke the back of the downtrend. 20 MA is flattening up. It's going sideways now, above the 50, closing breakout. And here's my price void. So I have a multi-week bottom. That's another sloppy head and shoulders type thing, with this being the head. I got 2 shoulders here. I got my right shoulder here, and you buy the breakout. So, just 3-day swing trade on this. So here's daily and weekly. And Greg, we have these discussions with Alex and other people in the green room all the time. It's when we start anticipating, these tells and saying, you know what, there's enough here for me to take a 20% position, a third position. I don't remember the symbol on this one, but I remember the day it was earnings. So we have a weekly climactic buy setup, multiple bottoming tails. This actually gapped down on earnings. I had it on my watch list as a short 30-minute low. And look how it closed. So why don't you take it from here? What's your belief now? We didn't give a trade yet, but this was, we might have the next day, I forget. But based on this is a something bar. It gapped down to new lows in a range expansion closing breakout on earnings with a climactic on the weekly.
It creates a belief that it's put in, which should be a reliable low point. So it's likely it's not going further lower in the short term.
But see, I still have declining 20 and 50. So I'm not all in, but this is my event bar to start paying attention, saying, I think it's a short-term low. And then we could maybe start selling out of the money puts on it, which would be expensive after this collapse. Probably the next day, we would say buy a half lot, stop under the low. Maybe if we get a 1, 2, 3, then we would be all in with a full position. Weekly on the left, daily on the right. So using multiple time frames. So is this a bottoming pattern on the weekly?
Looks like it.
Looks like it, absolutely. And when we do MT lives also on moving average analysis, we talk about the slope. Look at the angle of this collapse. And now it's starting to flatten out. Now put the candlesticks on. and look at the pivot highs and lows, and the selling is easing. And I have a big multi-month bottom, but I'm trading the daily charts. So here's my, so it broke out. Here's a breakdown failure. It's a mess. It's a mess. It's a mess. But now that I have my wide range closing breakout of this mess, we would buy over the high of this bar, stop low. And I honestly don't know what the target is, but I would say possibly $80 to $90 based on this weekly bottoming pattern.
Definitely good for a put spread.
Absolutely. Right. The power of this daily bar, whatever price this is, let's call it 64. We have a checklist of selling options and spreads. And I would make sure the options are liquid. I would see if they had a 64 strike. We love doing 10 days or less. If they're liquid, good premium, I would definitely be selling $64 puts here. All right, so this one I purposely didn't call this a bottoming pattern per se, and Greg, give your comments on it too. So I call it a bullish turn at the 50. So it's rising. So it's not a bottoming pattern like I've been showing you, but it's a bottoming pattern in an uptrend after the fall from here to here. So, semantics or whatever, but we're having the same discussion here about, okay, what are my tells and where is my entry?
Yeah, so it came down. Actually, it violated the prior major support point. So it came down a lot. And then, so one of the reasons, besides just trend analysis, that we mark these pivots, which I said low pivots are defined as a bar with at least three or more higher lows to the left and right. And you see there's one here. So when one breaks, our belief is, based on the method we trade, is that when it breaks, the next one is going to be the area where it is likely to go down to. So the closer they are together, the greater the probability of it's not going to continue to trend without some type of reaction to the next area. Then the question, what is the reaction? And so what was marked off here, right? Gap reversal closing with a bullish wide range bar plus WRB. That's that bar right there where it had the little gold star. Now this one, bullish engulfing. Here's the red bar, and it's grinding down. You've got your first event, right? The bullish wide range bar, which maybe it's going to hold, right? We don't know. The red bar is like, okay, what's it going to do now? So if you said, hey, it's at support, I see this gap reversal bar, and you see the red bar, one of the things that you could think is, well, if I'm looking for a long bias, what do I not want to see happen, and what do I want to see happen? Right. So if this red bar is going to follow through, it's going to hold somewhere in this area and flip right back up again. Or the red bar is just going to be negated. And that's what happened there. So now we're putting together trends, support, resistance, events to guide our bias as to what is happening. So as we put this all together, it begins to create a stronger belief that XYZ, whatever this is, actually it's right, CZR, you can see, is bottoming, right? Is bottoming action here, and it's likely to retrace. Take the trade, see what it does.
So we gave two trades here. We said buy the stop over this bar's high and break out from a bullish turn at the 50. There's your stop. And then we also gave a put spread. So yeah, we could have stock and option trades on the same. Down a lot, rising 200, bobbling around. Where's my event? I got nothing in here, nothing of interest. Wide range closing breakout. There's my 1, 2, 3, 4. Nice little gap the next day. We bought a 5-minute high. Stop under the low. Just
Remember, the 1 is the big bar. The 2 is the resting bar. The 3 has to break the inside of the resting bar and retrace back up again. And you put these 3 bars in the context of what preceded it, right? By themselves, they mean nothing. You have to look at what preceded it, the whole thing here, bottoming action, moving averages, blah, 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 blah. You could even start looking at volume if you wish. But there's a pattern that suggests prices are going to move up.
And it looks like we sold this one $6 gain, $12 gain, and just trailing their prior bars low. I don't know how high this thing wants to go. So Greg, this was actually your trade a while back, spiders. So it's an example of today's subject on a 5-minute chart. And we've been talking about this 1, 2, 3, 4, and so forth. But since you traded it, why don't you explain it?
Yeah, I mean, it's the same thing in a different time frame.
Right.
I mean, I don't remember, at the time what we were looking at intraday, but look, it was going down.
Breakdown failure.
Goes down further. The breakdown failure. It begins to bottom out there. So this was your first indication, when it retraced all the way back. And then there's your wide range bar, right? Here, 1, 2, 3, 4, which I've explained a couple of times. There it is. Take the trade.
Yep. Got the price void, go into management mode. You'd be selling into strength, etc. And the way your trail management would dictate how you manage this. But the fact that you got all these red bars ignored is very bullish.
Yeah, so I'm just going to explain where this came from. The 1, 2, 3, 4. So many, many, many years ago, we traded 1, 2, 3s, 1, 2, 3, 1, 2, 3s. Right? And it's like, okay. And back in the 90s, back at that time, and even, a little after that, but the middle to late 90s was like, okay. And it worked out great. And then all of a sudden, things change, environments change. And so I started seeing our stops were getting hit under the wide range bar. It would move up a little bit, marginally come back down. And then we get stopped out. And by reviewing trades, I'm like, damn, look at that. It took us out and it came right back up again. I said, and that's why that's a money bar, because it takes out the stops. There was the tell. So this setup is so reliable, I coined it a money bar setup, because it rarely fails. And now, again, repeating, you have to put this in the context of what preceded it. So it was in a downtrend, tried to go down, it came back up again, wide range bar, it's bottoming, and this big down move creates, this void concept.
Just big inverse head and shoulders. This would be a climo, but is this a bottoming pattern? Absolutely not. It's just it's a climo. It's a different trade. But now, as Greg drew here, big old inverse head and shoulder, closing breakout, price void. Pretty straightforward.
Yeah, I just put a star under that bottoming tail bar. So it's not a 1, 2, 3, 4. But when you see, let's just call it indecisive price action. It's chopping around these bars. You got a topping tail there, and there's a bottoming tail bar. But the depth of this retracement is your clue, right? That deep retracement, that things are changing. And so now, it breaks the low and it comes back up again, and it's holding. So you can see how you start putting this all together, and looking at the bars and the retracements, you have to put together these concepts. So that's, by taking the course, and being able to go back and listen again, today, tomorrow, next week, next year, whatever, to reinforce these concepts. I'm telling you this what the struggle is, and maybe why a lot of people tend to gravitate toward the indicators mythology. They do initially because that's what they're inundated with. But as you start to recognize things more quickly, deep retracements, as I drew out here, it's like, oh, it went down and it went all the way back up violently. It's starting to bottom. And then you start putting together the bars. Whereas, I don't know, somebody might look at this and say, oh, but you know what, Greg, this MACD indicator gave me a nice signal here and it started turning up and it told me what to do. Well, all you needed to do is look at the price action. And sometimes, depending on the settings of your favorite indicator, it doesn't give you the picture that you wanted to see. So what we're explaining to you here is how to recognize price action, because that's what everything else is based on. Let's continue, Dan.
Yeah. Come check us out in the green room. This is our live trading room. We start at 9 a.m. pre-market prep, look at gaps, opens, our game plan for the day, for day and swing trading. And it's phenomenal learning throughout the day. We scan, we teach, we trade, we have fun, and you get to know us in real time. Just another bottoming pattern. Now, the only reason I'm showing you this is junk. I mean, I can tell by how, it went up a lot, which is kind of squeezing these MAs, so it's kind of hard to see. But even junk, we were in one day, wow, I forgot about this. We bought it at $5 and made 53% in one day on a piece of junk. But it's the same approach that we're talking about. So this is Intel. I left it. I grabbed this earlier today. And this is what I said earlier. We'll come back and talk about. Is this a downtrend bottoming? Or is it a consolidation for a breakdown and a downtrend? So let's use this kind of as a quiz, Greg, before we look at real charts. What are the clues? What would you like to see to give you the confidence to go long or short? What do you think?
Is that Intel?
Yeah.
Yeah, we were talking about that before. It's like,
Right.
I don't know. I mean, there are clues there like this, that didn't follow through. And look at this red one with the volume and it didn't follow through. Now that gapped up and it failed, but it's still not following through. The moving average is getting tighter. So like the spring is getting wound up there. And I don't know. We have to wait. There's no big bars, like a gap down reversal or, big old bottoming tail bar or something like that.
Right.
And then we look for something to rally from there if it happened.
Yeah. So, Robert's saying short. So Robert, I typed in here, what would you like to see to give you the confidence? And for me, the answer is this shock bar or tail bar, up or down. And as there's many examples of that, but let's say it gapped up to $30, $32, and then it was a closing breakdown. That's a something bar. But see, just breaking support, it's a dog. It's a dog of the semis. But I was telling in the green room, look, there was 1, 2, 3, 4 attempts to go higher. And it didn't. So as of right now, today, the weight of the evidence is lower unless I get a shock bar, as Greg said, a gap down negated, engulfing to 32, bottoming tail or something. So right now, we all these other examples, we've been highlighting the clues for you, the tells. This one is still a declining 50. Yes, it's flattened out, but we don't know the answer.
So the answer is set an alert above and below and forget about it. Move on.
All right. All right, let's what do we got now? This is a longer bottom again, and we're looking at the clues that started with this what we call red bar ignored, and then our entry was actually over this red bar for a multi-week bottom here. And just for the fun of it, if you want to write it down, this actually is Apple Computer last year. April last year. So that's what? That's 14 months ago. Apple is trading at $214 right now from this bottom. And we traded it. We gave this to subscribers. I think I would have to go back and look. I think I gave a target of 135 from this bottoming pattern and price void. Just eyeball it, 135. We don't have to talk about this, but this is our last slide. The same analysis applies to topping patterns using master trader strategies. Breakout failure, lower high, engulfing bar, bearish consolidation in the lower half. 20 EMA has rolled over, closing breakdown, price void daily, price void weekly. Apply everything we've talked about to topping patterns. Good stuff, you all. Here's where you learn it. we've had people with over 25 years of experience take this course, and it will just catapult your learning, whether you're brand new to trading or experienced. It will help you master the art of objective technical analysis through the culmination of what Griggs calls these thought building lessons. So it keeps you objective, trading what is compelling patterns, not what's in your head.
And one thing you could say about those people that have had so many years of experience is that, well, two things. They've had a lot of years of bad experience trying to search for what works through the indicator-based methodology. The other thing you could say is, man, for them to stick through it all those years and keep plugging, they're really good as far as, their ability to, get through all of that. So let's take a look at some charts and some bottoming patterns here. So this is one that's been bottoming, seemed like forever. Tesla. And so this is what caught everybody's eye back then, as far as, it was trending down. Again, you see the similarity with some of the slides that we showed you, in that it spikes down and it comes right back up. It spikes all the way back up again. So there was news, I forget what it was at that time. And then during this time, there was this news about his pay package or not, or different things that went on. And, here it looked like, okay, here's one of those treachery things. It's going to go back down again, and it recovers. And here it looks like it's going to get a 1, 2, 3 or 1, 2, 3, 4, and it goes back down again. And here it begins to hold. And we probably traded this a few times during that, with either spreads or directionally. I know I traded it directionally, and it didn't work. And here, like, okay, it's going to go down and right back up again. So, and this is where these pivots really come into play, where, you mark that pivot and, now back up again. And so now it's good. I think it's going to the 200 at least. But I pointed out to Dan this morning, it's like, hey, this is like a no-brainer put spread. And Dan put that on this morning, and it's doing great. So just making the turn, it looks like it'll go up. Yeah, they have recalls on their new trucks, and look what it's doing, Kim. It looks like it's going to, blow through that and go up here, and that news is out, and it's acting well. And there's Apple. I don't know if this was the same spot, Dan. That no, you were talking about it, I think, here.
It was, no, last year in the summer,
Yeah, it was somewhere
April
over here.
last year.
April. Yeah, here. Right here. All right. So
Yeah, yeah, there you go.
and it's had some, here's big giant moves, right? Bottoming, treachery, back down again, back up, and remember the news that was there. Amazon. Is it a top? It's not tight. It's not bottoming. I mean, maybe it's bottoming. Today, it reversed this nasty bar. We'll see if it closes above this high. But it's been in a range. Looks like it's going to be a new close there. So that's sloppy. I'm not interested in that. You can see the 50 is still well up above. Boeing, that's bottoming. We'll see if it holds or not, but down at the bottom of the range, see the moving averages are flattening out. Here's one that was in an uptrend bottoming. This was a trade a couple of days ago. Right? And this was in the weekend letter, right, Dan?
Yes.
Yeah. So this was probably on an earnings gap, I imagine.
Yes.
Coming down here. And here's the tell. Here's the tell.
So this one's bottoming in an uptrend as opposed to the beaten down ones, but yeah.
Right. And then this bar closing at its high is the one that says, hey, this thing's going to go.
Yep, no brainer.
It's supposed to go. Where is the tab for the stock options? If you want to see options, you can set them up like this, like I have them. Or if you just right click on your chart, you can just open an option chain and you can do it that way. So different ways of getting there. I want to look at snow. So here you've got your second bar, right? This was a nice one, but it's still well below the moving averages. So what you want to do here is look to the left. And there's nothing there, it looks like. Is that? Okay, so you've got those lows there. It's a little above those lows. And you've got the start. You've got the start of a bottom. So I would definitely put it on a watch list and see what it does. Put it in a little thumbnail in your platform and just keep an eye on it. Maybe you could do a put spread, so you go there and look. Just say, hey, is there premium at 120?
For Friday. Yep.
Where are the days here? Symbols, days, value. What is expiration? I forget what it's called. I'm surprised I don't have it in here. Here, well, here, I don't need it. 2 days to expiration. 120, there's nothing. So you'd have to go out to next week, 9 days to expiration. And there's still no premium. So that's part of, looking for credit spreads. You see patterns and then you go to the option chain and see, if there's enough premium to do a spread. And I don't think it's ready for directional yet. I wouldn't know. I mean, I don't know. Maybe if you went out a month or something, Dan, I don't know. You have to hope that this develops rather than waiting for it. Go sideways a little longer.
Well, or 1, 2, 3. Let it prove it one more day with an inside bar.
Right. So this big bar, you see that rally on the 30-minute chart? It's going straight up, and maybe it can get up there. And so the essence, the idea behind a 1, 2, 3 is just like this momentum move is the big bar on the daily, and the 2 bar is a resting day. So it begins to build a base. the number 2 day, and then, the continuation. And sometimes you get the 1, 2, 3, 4, which it breaks the intraday base and comes back up again, which is great when that happens, because you've already got your wiggle there. Maybe this is topping. I don't know. Is it topping, or is it just building a new launching pad? So how it broke down, looked like it was rolling over and it came right back up again. It's not ready. Not ready. That's not bottoming. This is reporting earnings tonight. It's going to report earnings. That'll have an influence probably on the broader markets, of course, because the broader markets are being influenced by semiconductors right now quite a bit. And, NVIDIA will be influenced to some extent by what Micron does, but this is, I don't know. I think if this closes weak, it opens up the door potentially to move down, and then we'll see how much it bottoms or what it does, if it comes down to the 50 or not. AMD, maybe it's still part of a bottoming process. Look at the volume on this day here. So what we want to see now, right? Maybe the MU news is good tomorrow. So let's assume that maybe this closes red like that, and we have a bullish 180 by the end of the day tomorrow. And so putting that together, with this bar, and then if we were to get a 180, we might have something going there. So something, we'll see what these semiconductors do tomorrow after that. What else should we look at? There's a top, right? That broke down through that major support level. It looks like it's got to come down to at least the 50. There's an unfilled gap down here. I think this is my weekly chart. That's your weekly chart. So it gets you a big topping tail bar there. Look at the broader markets here, intraday. Pretty messy. The Dow, which was so much weaker, showed strength today. But overall, it's just really, really sloppy. You can see the Russell weaker yesterday, showing a little strength today, but going nowhere. S&P's going nowhere. Q's basically going nowhere. Trump. Look at the transports, Dan. Coming back from run over the cliff, the transports.
Well, FedEx is a big part today.
Yeah. Big giant move. Maybe these are bottoming. Look, there's a rejection of a breakdown. Still waiting. It's not any significant support there. So waiting. That gap down reversal. You mentioned that pre-market that it was weak, and look how it came back.
Yeah, you gave weak guidance.
It's good.
How about one more for Julio, Pepsi?
Which one?
Pepsi.
Nah.
It's downtrend.
Look at how wide the action is. Up, and then it fails like that. It holds the area of that pivot. Now it's a sell setup. For whatever reason, it's acting today. It's just too wild. Two big moves. Look at the size of the bars and the moves. I just don't want any part of it. It's too crazy. Coca-Cola, maybe it's going to break out. Look at today's gap reversal.
Your old 1, 2, 3, 4.
Yeah.
But
TXS. doesn't trade very much. I don't know. It's a trust. Julio, maybe I don't know if it pays a dividend or not. I don't see anything here. I don't, it's so slow. I would not consider it for anything. Oh, thanks. Okay. Yeah, look at that. It was like this was the first stock split this company ever had since it's traded. 50 for 1. And it was at 3,000 or something yesterday. Yeah. All right, I could look at one more before we split out of here. That is not bottoming. That is, again, the differentiator between things that are bottoming and not is that when they're still so erratic, where the pivot highs and the pivot lows are far apart, and there are overlapping bars and it's intersecting the moving averages back and forth like that, that's insane. It's uncertainty. You don't want to get whipped around. The wide range bar here, and it comes up and comes all the way back down again versus, down here, it's hard to see. Like when you get so far away, but where things are ready to move, they tend to get tighter. Look at the moving averages and then the explosion there on volume, igniting a move versus, this kind of wild craziness that's going nowhere. Right. It hasn't started to tighten up. So I hope you enjoyed this. Join us in the green room. Consider the letters. I mean, one of these trades will pay for that letter. Someone sent you an email the other day, Dan, paid for 2 years of the letter.
Yeah, like Carvana.
Yeah. So
All right.
have a great day.
Ready?
We invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.